Welcome to Illuminati Silver. We tell the truth about silver. Today is Sunday, the 7th of August, 2022. And we're looking at gold and silver's price performance last week, as well as other economic data, and also hazarding a forecast as to how we see prices performing after super strong non-farm payrolls jobs data on Friday. So without further ado, let's take a look. Gold rose $10 last week, rising from $1,766 to $1,776. Having hit a high of $1,795, so not quite reaching that 1800 level, and a low of $1,754, not quite reaching the $1,750 level. A rise overall of 0.6%. In sterling terms, it finished the week at £1,470, that's £1,470, that's up £20, and in euros it closed at €1,744, up €17. Silver fell 48 cents, falling from $20.39 to $19.91, having been as high as $20.53 and as low as $19.57, a fall of 0.5%. In sterling terms, silver closed at £16.49, that's down 25 pence on the week, and in euros it closed at €19.57, that's down €0.36. The gold to silver ratio rose as a result, of course, from 86.6 to 1 to 89.2 to 1. Now, looking at the prediction we made last week, we said we expect to see gold trade between 1700 and 1800, with 1675 and 1850 as outliers, and silver to trade between 1850 and 21, with 18 to 22 as outliers. Well, gold traded within a relatively modest range of $41 and kept well within our normal trading range. Silver traded within a band of just 96 cents, relatively modest again, and again well within our normal range prediction. Now we shall look further into this after we've assessed other financials. Bitcoin's fallen this past week by $1,036 and currently stands at $24,210. It has, based on historical performance, maintained or remained relatively steady these past 7 days. $1,000 in the life of Bitcoin is tiny. Equities were a bit of a mixed bag in performance terms. The Dow Jones closed on Friday at 32,803. That's up 76 points on the day, but down 42 points on the week. The S&P 500 closed at 4,145, down 7 points on the day, but up 15 points on the week. And the Nasdaq Composite closed at 12,657, down 63 points on the day, but up 267 points on the week. Now we've had very good news for oils. Brent crude closed at $94.92, down $9.05, and WTI crude closed at $89.01, down $9.61 on the week. Now, will this fall continue remains to be seen. A strengthening dollar will, of course, have an impact, but there are other forces afoot that has caused this decline, and we shall focus more on that perhaps next week. The dollar index stands at 106.62, and that's up 0.72 on the week. Now, we stated in last week's report that there was a fair amount of data being presented or published, culminating in the non-farm payrolls on Friday. Well, let's take a look at that data and also what happened to gold and silver prices along the way. Now, let's take a look side by side at what data was published last week and how gold and silver, but gold particularly, responded to it. Now, on Monday, we had the S&P US Manufacturing PMI, and that came in exactly as forecast, 52.2. The ISM Manufacturing Index also came in very close to forecast at 52.8. But construction spending for May was down 1.1% compared with expectations of plus 0.4%. And we can see on Monday the gold price initially dipped, recovered a little, and held up moderately well at around 1772 compared with 1766, so it's up about $6. Then on Tuesday, we had job openings, which were lower than anticipated. Job quits, basically the same for June as it was the month before. And then we had a range of, shall I say, unusual data, which we don't tend normally to follow, but it's worth looking at as it's here. We had the rental vacancy rate, homeowner vacancy rate, very similar to the previous month or previous quarter's figures, I should say. Nominal credit card debt was actually up at 5.5% for quarter two compared with the previous quarter, and real household debt was also up 0.3%, and that's not surprising, and we can see gold increasing in value here. Then on Wednesday, the initial jobless claims came in as expected, but higher than the previous week. And the continuing jobless claims were also up. Then had a trade deficit similar to expectations. But we saw late Tuesday quite a significant fall and then a recovery on Thursday. However, that recovery was short-lived because the non-farm payrolls came out at a hugely higher figure, not only compared with the previous month, but certainly compared with expectations. And this really took the steam out of gold and silver's rise. We can see on Thursday the price rise from a low there of around 1758 up to 1793, 94, nearly 95. And then once these figures were announced, we saw the price plummet. It rebounded a little, but it actually, most 50% of its gain had been lost. And consumer credit had risen in June as well. Now, we stated that the non-farm payrolls would have the greatest impact, and we think, frankly, they have. Although we did say last week it won't have such a great impact as it would normally have, because the Fed's FOMC is not actually going to announce any further cut or rise in interest rates, rise more likely, until September. And so really whatever is published in August is going to have a limited impact, which is why we're seeing some little strength in gold, a little weakness in silver, but nevertheless holding up quite well when one considers the fear of us entering into a recession. But these figures next month, the non-farm payrolls, we would be shocked if they're anywhere near as high as this. And so it'll be interesting to see, but if they're still in positive territory and above expectations, then we might find ourselves in a situation where the Federal Reserve will have to raise rates by 0.75%. And if, as is feared, that the UK has already stated that it could have double-digit inflation very soon, if that occurs in the US, then you might even see a 1% increase in September. Now, Bart Melek, head of commodity strategies at TD Securities, is quoted as saying, quote, "Gold had recently rallied on the thought that the Fed will shift from hawkish to dovish, but the jobs data shows the US economy is strong, and this can prompt the Fed to be more aggressive, which is not a good story for gold. The next catalyst for gold prices will be the US CPI print coming out next week," unquote. So up until Thursday, the pivot we mentioned last week was continuing, but the jobs report really has put paid to that pivot. Now, this coming week, we have some more important data being announced, with Wednesday being notable. On Monday, we have the New York Fed 3-year inflation expectations for July. Tuesday, the NFIB Small Business Index for July, plus productivity and unit labor costs for quarter 2. Then Wednesday, we have CPI and core CPI figures for July. Do not miss those. And wholesale inventories for June. Thursday, of course, the weekly jobless claims, plus the producer price index for July. And then on Friday, the import price index for July and the UMich preliminary consumer sentiment index for August. So as stated earlier, all eyes will really be on Wednesday's figures. Now let's go back to gold. We can see that 1800 offers considerable resistance, something we mentioned last week. The market view is that the gold price needs to rise above 1815 in order for market strength to push it higher. Our view is it really needs to surpass 1850 before we may change sentiment on gold. And we just simply cannot see what incentive there will be over the next week or so in order to cause that to happen. Equally, though, we have to be fair on both sides of the equation. With inflation still running high, there will be a degree of underpinning of the gold price too. That doesn't mean the price may not fall, but any fall will be restricted. Now, the strengthening of the US dollar, and with the prospects of further interest rate rises in September, especially on the back of strong employment growth, may further put pressure on gold and silver prices. Although it does appear that we have some quite strong support at that 1750 level. And frankly, short term, 1700 or lower will be tough to break into. At least until we approach the next FOMC declaration, which is not until the 21st of September. That may be a different ballgame, but much depends on what happens between now and then. Now, silver's support is really quite strong at $18 and resistance at $20.50. Of course, silver is going to move in a similar direction to gold and is affected by similar events. That said, though, if the economy does appear robust, even though inflation is rising, the negative premium against silver for industrial demand purposes may not be present, meaning it may not have the dramatic fall that it could have had if we were moving into a recession. We will, of course, have to see further data before we know where the US and the global economy actually lies. We seem to be having some growth, certainly of jobs, but at the same time rising inflation. That's not always a surprise. Those of us who've been in this game long enough will remember a number of occasions where this has happened. The issue is, of course, can the central banks maintain growth, GDP growth, while at the same time curbing inflation? They believe the best way to do that is essentially via interest rates, but of course, the higher interest rates go, then the less economic activity that may occur because borrowing becomes that much more expensive and consumers have less money in their pockets because they have to pay for mortgages and car loans and other bills. So with this in mind, we expect to see gold still trade between 1725 and 1825, with 1675 to 1850 as outliers, though we'll be surprised if that lower outlier is reached in the next week. We forecast silver will trade between $18.75 and $21. It could actually go either way this coming week, though we suspect there may be a little bit of pressure because of that jobs report, with $18 to $22 as outliers. What do you think? Please do share your thoughts. Meanwhile, thank you so much for listening. If you haven't done so, please subscribe to the channel, not forgetting to press the bell sign so you're notified of our videos as and when they're published. And we will be producing this video again tomorrow, but under a different thumbnail and heading. And we have some announcements to make on our Crypto Plus channel, which will be quite exciting. And after next weekend's video, we'll be talking about the changes we're going to adopt to the Illuminati Silver channel, which will be even more exciting in our view. But meanwhile, we wish you a safe, enjoyable weekend. And as always, a prosperous week ahead. Illuminati silver owners come from a background of banking, international wealth management, and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.